Hello there. This is James, and you're watching OneRoyal, and it's live. In today's program, I just simply want to discuss how the last 5 days have been full of drama, full of a bit of excitement, and how the market is generally feeling before it heads to the weekend break. But, but before I get into all of that, don't forget these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research, do your own due diligence, and of course, know the risks at hand before entering any trade. With that out the way, let's get started. So let's start off like with every trading week. What a week this has been. Let's go over some of the major stories which the market covered, discussed, and the impact those stories have had on the market. First off, Macron, French president, hosts a group therapy session. Now, in fact, he did indeed call an emergency defense summit in Paris this Monday, or the last Monday just gone, and it was attended by France, Germany, UK, Italy, Poland, Spain, Netherlands, and Denmark. These countries are considered the main military powers in Europe. Now, the meeting was to discuss the exclusion from the table in the very first Ukraine peace meeting between the United States and Russia in the Kingdom of Saudi Arabia. They weren't the only ones not admitted. There was another country, pretty important country, not to be included in that meeting. That was, in fact, of course, Ukraine. But anyway, they were here to discuss their importance in making sure they can have an impact on any peace deal happening in Ukraine, etc., because this obviously, impacts everybody. They were also there to discuss an increase in military spending, because quite a few EU countries are missing the NATO target, well, actually NATO countries, should I say, are missing the target of, getting to a minimum of 2.5% of their GDP. A lot of them are way under that target. So there was a discussion to obviously increase military spending, because I think the feeling is, of course, with recent developments with Trump 2.0, on some of these things, they might be on their own and cannot necessarily count on the United States as much as they used to be able to. So indeed, they need to start increase military spending. There was also discussions in this meeting to put boots on the ground, as in put a peacekeeping force in Ukraine if a peace deal is made. UK Prime Minister Keir Starmer, he did say he was willing to commit UK troops to be as a peacekeeping force. Germany as well also said they'd be open to that idea. Not every country is so keen, like Italy, for example. Apparently, in like a recent survey done in Italy, they are tired of sending money to support Ukraine in the conflict, let alone send troops for peacekeeping. We're talking about. But anyway, the knock-on effect to the market of this, of course, was a surge in defense-related stocks. A massive surge in defense-related stocks. Now, I can't say the name properly. Rheinmetall, which is a big German defense company, gained 11%. Swedish company Saab advanced 11%, and UK's British Aeronautics, BAE, shall I just say, it gained 6%. Apparently, BAE's best performance in a number of years. So a number of military stocks did indeed make several gains on Monday because of this meeting and because of the fact that, like I say, Europe are going to have to commit more to defense spending. And as well as that, because of that, it drove the likes of the DAX and the Euro Stoxx 50 to hit an all-time high. I repeat that. The DAX and the Euro Stoxx 50 hit an all-time high. But it's not just because of that, though. And we're going to come to that in a minute. So it's not just because the defense companies went up. There's something more to it. And that's the next part of what happened this week. Anyway, moving on, keeping on with that day. Obviously, there was the first meeting between the US and Russia, which occurred in the KSA. It's the first meeting they've had since January 2022. The following month, we all know what happened in 2022, what happened in February 2022, hence why they haven't met since. But it's the first meeting since January 2022. It's early stages. They've just said it was just basically putting out the feelers to see how, if it's possible to come to some sort of peace arrangement. But like they said, at the end of the meeting, they were there together for 4 hours. I think there was some common ground found, maybe. But again, this is still very early stages in a potential peace treaty in Ukraine conflict. Another thing, keeping with Ukraine, which came out this week, and it was the official pitch by Trump to Ukraine. He wants his precious. Trump wants his precious. Yes, basically, Trump's pitch to Ukraine is they want, or the US wants 50% of Ukraine's earth minerals. Now, these earth minerals are extremely valuable. These are used in technology, chip making, things of this nature. And we all know that one of the biggest industries, if not the biggest industry in the United States, is technology. It's the tech industry. So he wants 50% of their precious earth minerals. And the part of this deal is to pay back the money already lent to Ukraine, or obviously what that money they've gave them already for arms and things in this conflict, which has been going on for, since February 2022. And with a bit of a suggestion that if a peace deal is made, they will again have peacekeeping troops on the ground for them as well. So that's part of the deal of what they're trying to say. Moving on to another story. See, I've got market alert here. No, I haven't. That's okay. On another story. Again, remember I went back and I said about the DAX and the Euro Stoxx 50 hitting an all-time high. It wasn't just because of the increase in defense company stocks. There's another reason. The US stocks have lost the top spot. Bank of America recently did a survey this week where it said that 34% of fund managers, according to the survey, they were going to go and invest in global stocks. 22% of fund managers listed gold as their investment of choice. And 18% of fund managers went to US equities. Now, that's a complete turnaround from what the market was expecting at the end of 2024. At the end of 2024, everybody thought there was no stopping, the S&P 500 or the NASDAQ or the US stock market. But the fact that the market is starting to change direction, or investors are starting to change direction and put more into global stocks or European stocks, and gold, which we'll come to in a minute. It's been a good week for gold as well. Is interesting. As well as that, part of this survey said that 90% of the investors or fund managers they did this survey believes that the US stock market is overvalued. But anyway, looking at the gains compared to the European stocks to US stocks, hence the US stock market losing maybe the number one spot, is we go back to the Euro Stoxx 50, it's gained 10% year to date. The S&P has only grown 4% year to date. So there is certainly, looks like there is a slight change of the guard at the moment. But S&P should not be too downhearted because it still hit an all-time high this week. Still hit an all-time high. And we'll have a quick look at the charts in a minute. But like I said, on the video I've done quite a few videos on several topics this week. I did a video on this yesterday. There is a question I have to ask. Even though it's hit an all-time high, Are we living in a false illusion? A false illusion. If so, if you want to know what I said on that, check out the video about the S&P 500 hitting an all-time high. As well as that, what happened this week? Trump wants the world to buy more US cars. In many ways, he does, because he's announced this week, starting in April the 2nd, he's going to put 25% tariffs on automobiles, pharmaceuticals, and computer chips. Computer chips. Now, again, I mentioned this week. You may have a slight point because at the moment, the EU for automobiles coming in to Europe, they have to pay 10% tariff. But on cars going into the US, it's 2.5. So I can see he's trying to level the playing field a little bit, but being maybe a little bit harsh. But we'll have to see how this pans out. The market did get a little bit spooked by this, but again, this is supposed to happen April the 2nd, so they're probably going to wait to see what comes of it. Is it another bargaining chip? Now, moving on to my favorite this week. It seemed like almost every day it was making higher highs. But yes, gold again has hit a new all-time high this week. In fact, it hit it back twice this week. So it clearly goes to show that though, say, the S&P hit an all-time high, Euro stock hit an all-time high, DAX is performing extremely well, there is still something there for the market to be a little bit concerned that they are putting some of their money into the precious metal. And in fact, a number of investment banks are changing their tune and getting on the bandwagon and have changed their forecast to where they see gold going by the end of this year. UBS, Goldman Sachs, both jumping on this bandwagon. Bank of America was doing it last year, predicted gold would go over 3,000 by the end of 2025. But they're now predicting, both of them to go between, or gold to go between $1,300 to $3,200 by the end of 2025. And there could be a good reason for that as well. Because like I said, I know I've said the S&P hit an all-time high. And I know that we said the Euro Stock 50 hit all-time high and, and all this. But Walmart maybe gave a little hint that maybe there is a little bit of concern, a bit of uneasiness, because their earnings was released yesterday. And though great, future forecasts disappoint the market. Their earnings were better than expected, but their forecasts for the tail end of 25 and especially for 2026 is not good. And the market told them so, because then what happened is that Walmart's share price dropped by 6%, and this spooked the market. So yes, when their results came out, the market also fell a little bit. Now, this is, again, not something which is overly top dramatic at this point, but don't forget, Walmart is the biggest retailer in the United States. So if there is concerns that the consumer, especially with tariffs, especially with inflation increasing as well, will not be in the ability to spend, this is how you look at Walmart, because Walmart is a bit of a gauge to how the economy is really doing. If the economy is doing well, they're going to be doing well because more people are going to be buying stuff. If they're not doing well, more people aren't going to be buying stuff. So it's the early warning indicator. And this is why the market is a little bit spooked. And, and we'll look at Walmart and the charts in a minute as well, because I say it was quite a dramatic fall yesterday, and it has spooked the market a little bit. And this is why I think we need to keep an eye on it, especially what Target earnings is, which is early March, and Costco to come as well. The final story I want to cover this week, which happened, and that is really, is there a hawk amongst doves? The reason why I say that is because Japan's CPI was announced at 4% versus 3.6% expected. This means that Bank of Japan is expected to hike rates this year, unlike the other central banks, which are expected to sit on their hands or cut rates. I'm talking about the Fed sitting on their hands, and maybe the BOE and the ECB cutting rates to try encourage growth. So are they the only hawk in it? And like I say, that 4%, that's actually the highest in 17 months. So again, I did a video on this previously. Are we approaching an inflation problem once again? Anyway, let's have a quick look at the charts very quickly, and then we'll go through what we can expect next week. First of all, we're going to start off with gold. Obviously, like I said, look, we really have a very strong potential uptrend on this. It continues to hit higher highs. We're going to get about a profit taking head, no doubt, but really it's $3,000 out of the question. S&P, like I said, hit a new all-time high 2 days ago. Walmart scared it a little bit and dropped it back off, but it's still holding on. We need to really think how much damage this Walmart earnings report or forecast is going to do. NASDAQ, pretty much the same as well. Again, traded very high today, all-time high 2 days ago, but since the Walmart, it spooked it a little bit. So this is, I think, is going to be an interesting thing to look at. What else I want to look at quickly? Let's look at Euro Stocks 50. Again, hit an all-time high, but on the last 3 trading sessions, obviously has fallen down a little bit. And same with the DAX as well. Currency-wise, because don't forget, that's the other thing. Actually, well, no, before I go into those, I want to look at the dollar Japanese yen. Dollar Japanese yen. Because obviously, since we've had the announcement of inflation, it's under that key currently at the moment, under that key 150 mark. 150 mark. So that's key. So we are seeing yen strength against the dollar purely down to the fact that the BOJ is one of the only central banks likely to hike to fight the inflation. And finally, what do I want to look at? I want to look a little bit about the euro. There's something else I want to mention coming up this weekend, and that's German elections. Okay. Now, as it stands at the moment, recent polls indicate the Conservative Party winning. Now, it's going to be quite interesting because obviously Germany is the powerhouse of the EU, is the powerhouse, and they have had their own economic issues. So whether or not they can get political stability there on the back of this election is going to be really, really important. As it stands, it's still trading around 1.40, 1.4. My eyes are going 1.0466. Excuse me. So yeah, so I'll be interested to see how this reacts come Monday. But yeah, anyway, that's the market so far this week. It's been a real fun week, but it doesn't stop there because next week we have EU CPI, German GDP, US consumer confidence, US durable goods, and US GDP to come as well. So plus more Trump stories, more EU stories. Let's see how the German elections play out. So we have a lot of stuff still to come next week. This week has been fun. And it's been fun. It's been exciting as always. Let's see what happens on the weekend with the German elections and the implications that has on the euro. But anyway, remember, these are live shows, so you can talk to me anytime you wish or join in and jump in with your conversations. If you're not watching me live, by all means, put comments. If you're watching me on YouTube, put a comment in YouTube. If you've got a question, put a question in and I will answer that question next time I will go live. Anyway, on that note, if you, like I say, you're watching me on YouTube and you like this sort of content, by all means, subscribe if you like, hit the notification button so you know next time I'm going live. If you like the sort of stuff I do, you enjoy this content, by all means, give me one of these. It's nice to know that you like what I do. Anyway, till next time, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research, do your own due diligence, and of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.